China has accumulated a hell of a lot of gold. Now, how much she's got since 2002 as a nation, I honestly don't know. But I think we could probably, from her mines and various other sources, we could probably say that it's there's another, I don't know, possibly 10,000 tons. So what we're looking at in China is we're looking at probably 30 to 35,000 tons in the hands of the government, the Communist Party, if you were, hidden around various accounts like the People's Liberation Army and the youth wing of the Communist Party and all this sort of stuff, not shown as reserves on the People's Bank's balance sheet.
Experts say that the phrase, "he who holds the gold makes the rules," has been guiding the Chinese government's steady gold acquisitions. In recent years, the Chinese Communist Party has become more transparent about these purchases. However, Alasdair MacLeod, a prominent precious metals analyst and head of research at GoldMoney, believes much crucial information is being kept from the public to help the regime achieve its goal of global dominance. According to Alasdair, these plans have been in motion since at least the early 1980s, soon after China launched its reform and open-door policy with the adoption of a new economic development strategy in late 1978. He argues that the groundwork for a gold-backed financial system was laid in 1983 when the People's Bank of China was appointed by the Communist Party to acquire and manage its gold and silver reserves. Since then, Alasdair believes the PBOC has been discreetly amassing gold and now holds over 27,000 tons, positioning itself for what he refers to as the endgame. This endgame, according to Alasdair and other prominent metals analysts, involves China's plan, alongside allies like Russia and Saudi Arabia, to return the world to a gold standard. These nations' large-scale gold purchases indicate a clear intention to move away from the debt-based fiat system toward one backed by tangible assets like gold and silver. For Alasdair, this points to one conclusion. China has been quietly stockpiling gold in preparation for a new global financial order. Every move since then, he argues, has been aimed at preparing for the inevitable collapse of the current financial system and the rise of a new one backed by precious metals. As we share clips from Alasdair's recent conversation with Jay Martin, don't forget to like this video, subscribe to the channel, and turn on the notification bell so you'll be alerted whenever we post new content. Thanks for your support and enjoy the video.
I say that as far as gold is concerned, China is like Hotel California. Once it goes in, you don't see it again.
Right.
I mean, I did an exercise trying to work out how much gold the Chinese had before 2002, when they then set up the Shanghai Gold Exchange and permitted their citizens to buy gold. In fact, they advertised and said, gold is good for you, or whatever the byline was. And the result is that since 2002, the citizens have acquired something like 27,000 tons delivered through the SGE. Now, that's a gross figure because what I haven't seen is details, if you like, of scrap going back into the SGE's vaulting system. But I think, we're probably looking well over 25,000 tons, I should say, are in private sector hands. Now, the reason that they started to permit the public, if you like, the Chinese citizens to buy gold in 2002 was it was quite clear that the state had acquired enough of a stake for it to be satisfied and therefore not to be acting in competition with its own citizens in acquiring gold. And you need to go back to 1983 when the regulations were put in place for the People's Bank of China, was appointed then to acquire the nation's gold and manage the nation's gold reserves and also silver. That was 1983. Now, bearing in mind that from that time going on to 2002, there was a massive bear market in gold, which took it down from, we're talking about something like $600. It had been higher in 1981, but something like $600, $500 down to half that. A lot of gold was sold out from the West. And not only that, but there was a lot of gold leasing going on, where gold was disappearing into the market and not going back into central banks' coffers. This was estimated by Frank Veneroso in 2002 to have totaled somewhere between 10 and 16,000 tons. Now, he said at the time that he thought that this had ended up round the necks adorning Asian women. Some of it, I'm sure, did, but I think the bulk of it actually went into China. I reckon that by 2002, she had acquired between 20 and 25,000 tons of gold. Now, bearing in mind that ever since then, the policy has continued of not allowing any gold to go out of China. I mean, in 2014, I interviewed a director of one of the Swiss refiners, and I asked him whether he'd ever seen any Chinese refined bars, and he said no. I asked him the same question about 7 years later, and he said, well, I heard reports of a few, but we guess they were smuggled out. So you can see that nothing comes out of China. And as you rightly point out, they've accelerated their mine production. They import doré from elsewhere, I mean, particularly silver, and refine it, doesn't go out. I mean, the only part of China where there is any sort of free trade in gold is Hong Kong. But an awful lot of that, I mean, some of the gold from Hong Kong, I think, is released through from China. But basically, that is more or less matched by the people on a day trip to Hong Kong, walking into the shops in Hong Kong and buying gold jewelry. And they take it back, having saved sales tax of something like 20%. So,
in a recent interview, Alasdair mentioned that if you examine the money flows handled by the People's Bank of China, specifically in terms of foreign exchange, and assume they invested just 10% of that in gold bullion, it would amount to around 20,000 tons of gold. He believes this is a reasonable estimate for what the People's Bank of China has quietly acquired and hidden across various government accounts. These are not part of the official reserves, but are dispersed in accounts linked to entities like the People's Liberation Army, the Communist Youth League, and other government bodies. According to Alasdair, this estimate doesn't even include the private gold stockpiles held by Chinese citizens, who have had the ability to open gold accounts since the early 1980s. Over the years, China has seen a dramatic rise in its national savings rate, now one of the highest in the world. In 2005, the personal savings rate in China was about 25%, while the national savings rate was around 47% of GDP. Compared to just 0.5% for personal savings and 12% for national savings in the U.S., Alasdair estimates that a significant portion of these savings is being funneled into gold and silver, further aligning with the Chinese Communist Party's broader objectives. Now, let's return to the rest of the interview.
The other thing, which is a more recent event, is that banks have been instructed to offer gold accounts to their customers. And what this means is that if you've got a bank account with, one of the main Chinese banks, then you can equally deposit your yuan into a gold account, and then you have got an account which tracks the price of gold. Now, bearing in mind that China is a high savings-driven nation, they reckon that household savings amount to 35% of GDP. Now, that is the equivalent of $6 trillion. Property is not absorbing any of this anymore. They can't go and buy foreign investments because of exchange controls. The stock market has been pretty poor for the last 3 years, in contrast to what's been going on in the West. I mean, it's picked up this year a bit, sure, but not enough to persuade Mrs. Wong or whatever the housewife may be called to go and buy stocks. But her bank offers a gold account. And so the bank then has to go out and buy gold. And I think this is what we're seeing at the moment in the gold markets. We're seeing the stands for delivery on COMEX alone have been over 2,000 tons since 2021. I mean, it's a fantastic number. On top of that, you've got deliveries out of London. So, any spare gold is basically being siphoned off to the east. And of course, it's not just, the Chinese housewife bank account, bank therefore in the market, but it's also India. And they've recently removed, now you may ask why, but they've recently removed the tax, or cut the tax on gold down to something like 5%. India started buying gold too, after a long period of not doing anything at all. Why? Because she knows that the way the Shanghai Cooperation Organization is going, and BRICS, gold is going to be the future. the days of fiat currencies are rapidly drawing to a close. So she's got to have gold. She's very Keynesian in her approach, but even she sees, it would be a bit silly for us not to have any gold under these circumstances. This is something that I think, Jay, is going to continue until the system breaks. And when we see gold being just incredibly stable at $2,500, I mean, that just tells me that there's big money in there buying the dips, and it never goes further than maybe $10, $20 below the 2,500 level.
Right.
There is a big buyer in there, and my guess is it's probably China's got something to do with it. If not China, then her associates, like the central banks, whatever, around the Shanghai Cooperation Organization and BRICS.
Experts believe central banks are gearing up for a move reminiscent of the Hunt brothers' attempt to corner the silver market. Only this time, it's with gold. However, unlike the Hunt brothers, these central banks are some of the most well-informed and resource-rich investors in the world. Right now, they're aggressively using their vast resources to accumulate gold and silver for their reserves while offloading U.S. treasuries. Andy Schekman, president of Miles Franklin and a prominent bullion dealer, believes this is part of the endgame. He explains that countries are not only increasing their gold and silver holdings daily, but they are also repatriating their gold in preparation for what's to come. According to Schekman, these moves will be followed by a revaluation of gold, and he agrees with Jim Rickard's prediction that gold could soar to $27,000 per ounce. But it's not just gold. Schekman is convinced that central banks are equally focused on silver, though they may not be as outspoken about it as they are with gold. We'd love to hear your thoughts on Alasdair MacLeod's predictions for the US dollar, gold, and the global economy. Drop your comments, insights, and observations below. And don't forget to like, subscribe, and turn on notifications for more updates. Thanks for watching, and we'll see you in the next one.